Hi, everyone. Welcome to your latest Carson's Take 5. Ryan and Sonu here. Sonu, it's in the news, and it might not pertain to everyone out there, but we wanted to get this out there. Let's talk about Bitcoin. And by, I guess, kind of cousin that, cryptocurrencies as well. I'll set it up, Sonu, then go to you. Bitcoin obviously has had a heck of a run longer term. Back in October, it peaked about 126,000, and then it crashed like it's done multiple times in its life, as we'll get into. It was virtually cut in half until recently, bounced a little bit. But we get this question a lot, like, what should I do about Bitcoin? How should I think about Bitcoin from a portfolio point of view? And we're going down a little gray area this week, because again, talk to your financial advisor before you do any decisions like this. But we hear this question, Sonu, all the time. So we wanted to tackle a little bit. What is your take on Bitcoin high level here?
Well, Bitcoin should have been Bitcoin's moment the last year, because you had several things going for it. Over the last few years, you've had some momentum for Bitcoin and a few other cryptocurrencies too, because you had institutions going in through ETFs, exchange traded funds, right? So there was the feeling like maybe Bitcoin's historical volatility, it's probably about 3 times as volatile as stocks. When you think about risk, right? That
feels like more sometimes.
When you say, yeah, absolutely. It's almost like a single stock. We'll come to that, right?
Yeah.
When you add it into your portfolio, you have to think about how much do I want? Because it can drive, like, even if you have a very small piece of something that is extremely risky, that can drive your portfolio volatility up and down. That can be the key driver. You may have only 5%, for example, it's not a recommendation. You may have only 5% in Bitcoin, but it could drive up to a third of your portfolio volatility at that rate, 20, 30% even, right? So, but then the thinking was, okay, all these institutions are going in and there are ETFs, there's some support here.
Yes.
That should have worked for it, right? And then you had the most crypto-friendly administration as well. That should have worked for it as well, right? So that narrative was, like, okay, we have those two things going for Bitcoin and crypto generally. And then what did we see last year? The dollar weakened. And remember, everything we heard about crypto was that, this is supposed to be an alternative currency almost, right? Well, if the biggest currency in the world is weakening, you would think the alternative currency would strengthen, but we've seen the opposite.
No, we have. And really opposite also the view of Bitcoin. You mentioned from those big institutionals, those big banks. I'm not going to name names. You can look at what CEOs of big banks saying about Bitcoin 5-6 years ago. And now they're all investing in it. And they're all buying it with ETFs in different ways. So that's there's some changes there. But you did some incredible work. Just again, not to get too political on this, just stating facts. Like when President Trump won 1.0, right? What actually did well was like ESG. And some things like that, like you thought
clean energy.
You thought like crude would do good and do energy well. Didn't do quite as well. Obviously, under President Biden, one of the strongest sectors, Sonu, it was coal. Well, he wasn't supposed to be too friendly on coal, but sometimes supply and demand is a funny thing, and these markets price certain things in. And now you fast forward to where we are now with a very, very crypto-friendly administration, and this we're talking about Bitcoin cut in half. And again, we're not going to get into the weeds of all these, but there are. I mean, I think Grant on our team said there's like 3 million cryptocurrencies out there. Now there's some of the top 10 or 20, the big ones.
And just for perspective, there are about less than 5,000 stocks.
Yes, good point. Maybe 10,000 ETFs, give or take. But the reality is there's a lot out there, and a lot of the other big ones have been down even more than Bitcoin. One more thing for me, Son, I'll go back to you. Bitcoin, I believe it started in 2010. I hope I'm close enough for government work.
Like 2009, 2010.
2010, kind of it came out of the GFC. That's where really the idea behind it came. And if you look in history, the Bitcoin's been cut in half even more, sometimes by more, 8 times now. I mean, 8 times now it's been cut in half, and every one of them felt like they call it crypto winter. And trust me, this is above my pay grade. We're not getting too geeky with this. There's a halving that takes place every 4 years. Historically, the 4th year, like 2022, 2018, we're weak-ish as this halving came. A lot of people are saying maybe the weakness is kind of because of the halving, or started last year, maybe in front of the halving. I don't really know. I'm just saying that is one of the things that we see out there. You've talked about Bitcoin before. We probably need to wrap it up soon, Sonu, about thinking of it from an individual stock point of view and how historically individual stocks can go to zero. Because that's the question. Can Bitcoin go to zero?
Yeah, it depends on how you think about it, right? If you think about Bitcoin as an asset class, you don't usually think about asset classes going to zero. Stocks, they're backed by profits generally, right? The stock market overall. And we've seen the historical numbers, the Dow Jones climbing all the way from 1896. It was 40. It's at 50,000 now. That's on the back of capitalism, dynamicism, companies generating profits. Bonds, well, government bonds, they can always print money and pay you back. Now you have to worry about inflation. That's another thing. Gold, we've had, 3,000 years of history? Safe to say it's not going to zero, right? Yeah. So it depends. Asset class, we don't think about it as going to zero. But Bitcoin, as I said, is a very narrative-driven story, right? And the narrative shifted. It used to be like, oh, this is alternative currency. And then it's like an asset class you need for diversification. That's not really diversified unless you think everything else has gone up and this has gone down. Sure, it's diversified from that perspective. But then you think, one thing it's really correlated to, Ryan, recently, I've been looking at the charts, is Bitcoin's really correlated to software, right? Yes. It's really correlated to software. And software is, because of the AI thing, it's tumbled. Let
me chime in. Last week, we talked about the software sell-off. So watch last week's Take 5 for a little more on the color behind that sell-off.
Right. And so Bitcoin's very correlated. And I think, wait a minute, is Bitcoin a software stock, not an asset class, right? And now stocks could go to zero.
Yes.
Historically, over the last 98 years, there's a person called Bessembido who did this famous study. He looked at 29,078 stocks that were publicly traded, right, over their entire lifetimes, from 1926 all the way through 2023. About 29,000 stocks were traded. The median return was negative 5%, which means more often than not, if you just threw a dart and picked a stock at random out of 29,000 stocks, you would have had a negative return over the lifetime of that company on the stock market. But the most common outcome, Ryan, the modal outcome was negative 100%. Not most companies didn't go bankrupt, but the majority, the modal outcome, the most common outcome was the company went bankrupt, the stock went to zero. Just something to keep in mind.
Well, that is something to keep in mind. And you think about, how is the Dow above 50,000? How is the S&P 500 flirting with new all-time highs, global markets? It's because, again, kind of like we talked about last week, there are disruptions that happen out there. Companies do go away eventually over time. Not all companies, no, but as you just said, a lot of companies lost all their market value over the course of history. But as investors, listen, we are not stock pickers by any means. We like to take a big, broad look at things and invest broadly, and that's why different companies take over. Different companies take the baton. Yes, tech has struggled really since Halloween last year. We've talked about that a lot. But just take a look what energy's done. Look at what materials have done. Look what industrials have done. The baton is passed around, and that's the beauty of being an investor. But also the tricky part about, we call it chase the shiny object. Oh, my goodness, this is the best group for the last 2 or 3 years. Put me all in that. Well, history would tell us that is usually pretty darn risky. So, we're probably at the end. Any quick final comments on this whole Bitcoin conversation?
It's a reminder that, and this is not to say you shouldn't invest or anything like that. This is not a recommendation, right? It is a reminder that you need to, people think about, should I get in or not? And people spend less time thinking of how much of it should I own, right? Especially when something's really volatile. Maybe you want to own less, right? You want to think about how it interacts with everything else in your portfolio. And I think more time and thinking should go towards that.
Well said. Again, this was your latest Carson's Take 5 with Ryan and Sonu talking about Bitcoin. And please be sure to reach out to your Carson advisor before you do any decisions along these lines. But it is an interesting asset class that, for the right person, maybe it makes sense to have a little bit of allocation. But again, talk to your advisor before you do anything. With all that, we'll see you right next week. Take care. Thank you.